All right, ladies and gentlemen, I wanted to make a quick video talking about time frame correlation. Okay, so basically, during Alex's strategy, he mentions how one of the main rules he has for time frames are that you have to have two time frames in sync. Now, when I was first learning the strategy, the rule was you have to have two time frames in sync, and it had nothing to do with whether they were consecutive or not. You just needed two time frames in sync. Now, recently, I have watched his most recent boot camp recordings, so on and so forth, and he mentioned them being consecutive time frames in sync. Now, Alex also mentions that he's not teaching you how to drift a car. He's not teaching you how to drift a Bugatti. He's teaching you how to drive a car. Regular, road rules, put on a seatbelt, do this and do that. He's teaching you the safest way to apply his strategy, right? Now, it makes sense that if you have two consecutive time frames in sync, then your trade has a high win win rate or higher probability of success because overall you are headed in the same direction. Now, if you have non-consecutive time frames in sync, the risk is increased, or so you might think. However, I'm going to show you why that isn't necessarily always true, okay? In fact, I would go as far as to say that this right here, the daily and the 4-hour, is the riskiest trade setup possible, simply because you are trading against the highest time frame, which would be the weekly, okay? Now you're gonna see why I say that pretty soon, okay? So I actually would prefer these two trade setups over this one. Now I'm not saying that, this one will always be better than this one. No, I'm saying that overall, if you're trading with the weekly time frame, you will have better success than if you're trading with only the daily and the 4-hour, okay? So let's get into it. If you have watched the recordings, which I hope you have, you will realize that this is very similar to something that Alex did. This is called time frame correlation. What I've drawn out is a move on the weekly, the daily, the 4-hour, the 30-minute, and the 30-minute and the 1-hour, yes. The 4-hour, 30-minute, and the 1-hour. Now, the weekly is pretty simple. Weekly is pretty standard. Weekly moves always happen very, very easily, and they're easy to spot, right? Price always moves in higher highs and higher lows. You retest previous structure, and then you create the next move up. So this is going to be the move that we're looking at, the pullback on the weekly time frame. Okay, then you obviously have your higher high, which is pretty standard stuff. Okay, so this move right here, we are going to zoom in on and take a closer look at. Okay, so on the daily time frame, we have this push up right here. This is what I drew out right here. Now we have higher highs, higher lows, and higher lows. On the pullback, however, there are times where price has to shift, retest, and go bearish in order to have the actual pullback, okay? Now, it is very hard for us to go bullish on this time frame to then have the weekly and the weekly and the daily in sync, okay? This trade would ideally, you'd ideally shift above and continue to buy. However, in order for that to happen, you have to have a lot more structure and a lot more time, okay? So you can kind of see how this red line correlates with this red line. So this pullback on the weekly is this pullback on the daily. So the daily is bearish. Okay, so now that we understand that, we can take a look at the 4-hour time frame. Now the 4-hour time frame also has a higher low right here. okay? This higher low will get broken and price will go bearish, just like it did right here. Now, the 4-hour will shift bearish before the daily does, so on and so forth. So you have a lot of movements on this 4-hour time frame, okay? Now, once we get to the area of interest, we look for our shift of structure, and then price will start to trend upwards. We have learned this, and this is very standard stuff, okay? Actually, let me redraw that simply because I want it to be red. Okay, we get to this area of interest, and then we have a shift of structure. Now this is your pullback. This red pullback, this red pullback, this red pullback is all the same move. Now, once we have our shift of structure, then we can start to look for the buys. Okay, now that we understand this, we can see how this right here is this right here, and this right here. Now, if we zoomed in solely onto this area right here, in fact, more specifically, onto this elbow after the shift of structure. So this would be the very tip of the weekly and the very tip of the daily time frame, the very bottom. At this point, you get into the 30-minute or the 1-hour time frame. Okay, so the 30-minute and the 1-hour time frame, I should have marked it off in red, but we kind of understand that this is this move right here. Basically, we are trending bearish on this pullback right here. This pullback after the shift of structure, we start to trend. At this point, we're trending bullish. Then we have a shift of structure to bearish. And then we have our shift of structure to bullish. This is where we would take our entry, right around this point right here. However, for this example, this is this zoomed in zone, okay? So I also kind of wanted to give you an example of what the EMA would look like on these time frames. So the weekly EMA usually trends pretty smoothly. We're trading above the EMA, so we are looking for buys. On the daily, it would look like this. Price is rejecting, we kind of swoop around, and then price kind of pulls itself above this daily EMA. This daily EMA supports price. Okay, now on the 4-hour, it'll look a little bit different. The 4-hour, we will be trading above the EMA, and then all of a sudden we shift and we're trading under the EMA, and then over here we have another shift and we are trading above the EMA once more. Now on the 30-minute, it's a little bit more in and out. The EMA will kind of, switch back and forth, and then at a certain point, you'll be trading above the EMA once more. I'm sorry, this looks kind of sloppy, but this is the general idea here. So you can kind of see now how the daily and the 4-hour had to go bearish in order for us to have the weekly pullback. But once we get to the weekly area of interest, what happens first? Does the daily shift structure to bullish, or does the 4-hour shift structure to bullish first? The 4-hour shift structure to bullish first, okay? So at this point, we have the weekly. The weekly is bullish. The 4-hour is bullish, but the daily is still bearish at this point right here. Okay, this hasn't happened yet. We can kind of disregard this. Okay, so I kind of want to show you guys how If the 4-hour shifts bullish at the weekly area of interest, that is our first indication that price is starting to turn around and will continue to go bullish. Okay, we had a shift of structure from bearish to bullish. We swooped, now we're trading, the EMA swooped under, we're trading above the EMA. We can take our buy right here after we get our shift of structure and engulfing on the 30-minute or the 1-hour time frame. Okay, so this is why I would prefer to trade the weekly and the 4-hour over the 4-hour and the daily, because right now if we're taking the 4-hour and the daily together, we would be trading this move to the downside. Now, I would prefer to take this buy over this sell, because this sell is not guaranteed. In fact, price could easily do this right here. It could easily do shift structure bearish, create an elbow, and all of a sudden we shift back to bullish, and now price is gone. Now, this move right here to the area of interest is not guaranteed. This move, however, after we shift structure and we are taking buys with the weekly time frame, has a much higher probability of playing out than this lower time frame degenerate counter trend trade towards the area of interest. I hope you guys kind of understand what I'm talking about here. And this is basically a quick overview of how the time frames correlate. You can find this in any of Alex's boot camps. I'm not sure if he's changed his mindset towards the non-consecutive time frame trades, but this is my perspective when it comes to taking these trades. I like taking trades that are with the weekly time frame, and when the 4-hour shifts, it is an indication that the daily may follow later on. Okay, thank you for watching. Have a good weekend. Bye.